Hello and welcome. This is Business Incorporated coming to you live from Lagos. I am Bosun Omofaye. On the program today, the International Monetary Fund has asked Nigeria to urgently implement, quote, coherent and credible package of monetary, fiscal and structural policies. And Berlin is set to host the first ever Germany-Africa Business Forum scheduled for March the 23rd. And Kenya's Stanbic Holdings is supposed to lower 2016 pre-tax profit. Let's get started. The International Monetary Fund has asked Nigeria to urgently implement coherent and credible package of monetary, fiscal and structural policies. IMF spokesperson Gary Rice was quoted as saying Thursday that the window for reforms is closing on Nigeria as the 2019 general elections are fast approaching. The Bretton Woods institution further says the opportunities and comprehensive reforms is becoming limited for Africa's largest economy and most populous nation. The Nigerian government has been working since last year on a national economic recovery plan, which was scheduled to launch in the month of February. We cross over to the markets, where the Cairo's main stock index retreated Thursday after reports the finance ministry will recommend a tax on stock exchange transactions is called withholding tax. Other markets in the region are also in the red, but for Nairobi, which closed 0.43% higher on Thursday, it's a closed day for trading at the Egyptian market. The Nigerian Stock Exchange slightly negative intraday Friday. South African GSE also still in the red following Wednesday's Gordon Pravin's Budget 2017 speech. Since then, the Rand and the GSE All-Share Index in the red. As we speak, the GSE All-Share is around 0.55% in the red. Crossover to the Middle East, where the banks were a drag on most bourses as the major indices ended Thursday in the negative. As you may be aware, Friday is a general off day in the Middle East. So the GCC countries, you can see the Thursday closing figures there on your screen. A bit of a snapshot from Abu Dhabi, from Dubai, the Qatar Stock Exchange, the Saudi Tadawul called the Saudi SE. Let's cross over to Europe now, where it's been a bit of a bloodletting today. All major indices across the region were in the red because, well, quite a number of earnings on the streets from the banks, of course, that's from the UK, basically, and of course, a bit of those earnings from the other side of the Atlantic. It's been very a tough Friday to wrap up a very interesting trading week. Let's get Conrad Busen to wrap up the week for us. He's standing by at the Frankfurt Stock Exchange to bring the week to a close. But we're going to start from the U.S., where the new Treasury Secretary, Mnunchin, has held up the stock market rally as a positive report card of the 4-week-old Trump administration. Do folks agree with Mnunchin, or they are contesting that claim? Conrad?
Well, Bosun, I can tell you that people on the market still like a lot of the announcements by Mr. Mnunchin, the Treasury Secretary, and by the new U.S. President, Mr. Trump, but they also want to see them to deliver on their promises. Take those tax announcements, for example. 2 weeks ago, Donald Trump at a conference started to talk about tax reform. He announced that very soon we would get details about this reform. This week, Treasury Secretary Mnunchin said that he wants to see details of this reform to come out soon as well. And he also said that he wants to see a very significant reform passed before the Congress August recess. That's about all we got from Mnunchin, and that's not really enough to further boost confidence on the markets. Look at what the German share index DAX does today. Quite obviously, today investors are taking a few of this week's profits off the table. They're getting more reluctant and more hesitant as the weekend comes closer. Bonds, on the other hand, are in demand. Investors are seeking safe haven investments.
Yes, again, and of course, it's the end of February, technically, as it were, Conrad. So we expect a bit of that, and again, with some of the earnings that we've seen so far. Thank you very much. But let's stick with the earnings, still coming from the other side of the map of Europe, where UK is right now, talking about the Royal Bank of Scotland, also reeling from those regulatory penalties of the last 1 or 2 years, and Standard Chartered also saying, well, things are getting slightly better, trying to shake off what happened in the past. But the key question is the market surprised about these numbers from RBS and Standard Chartered?
Yes, the market is surprised. Both shares are down quite significantly, so around about 4% each. But of course, the stories behind those two banks and the concerns about them on the markets are quite diverse. In the case of the Royal Bank of Scotland, where the British government still holds a majority stake, this bank now really has a bit of a reputation to come up with new negative so-called one-off items every other 3 months. One-off items that have to be booked in the balance sheet and that sort of postpone further the moment that the UK government can pull off or pull out its investment in the Royal Bank of Scotland. In the case of Standard Chartered, it was really weakness in some of the regions where this bank operates in, which caused this larger than expected loss for last year. Standard Chartered is not only active in the UK, but also very much in Asia, and both regions are also difficult to predict at the moment. The UK because of the Brexit, Asia because of the potential implications of the new Trump administration's decisions, and that's also one reason why, in the case of Standard Chartered, investors are so negative about this earnings report today and hesitant. That's why they pull out of the shares today.
Yes, of course. Conrad, Standard Chartered is also has a lot of heavy footprint on the African continent, from Nigeria to Kenya to South Africa and all across the West Coast as well. Standard Chartered is that global financial institution. But let's talk about the week. We're wrapping up the week and we're wrapping up the month, as it were. By Tuesday next week, we'll be wrapping off February. So we're getting into the third and the final lap of the first quarter. So the earnings season should therefore start tapering off gradually. So as we move into month, what else would investors be chewing on when we come back to the trading desks on Monday?
Well, we here in Germany still have a couple of earnings reports to digest during the next few trading days. Germany is always a little bit later with its earnings reports than, for example, the United States. But of course, you're right, the earnings season is slowly coming to an end. And of course, this means that, political questions will come a bit more in the foreground again. During the upcoming month of March, by mid-March, the Dutch will vote for their new parliament. The Netherlands election is one topic, of course, coming on the agenda. In France, the presidential elections is due by the end of April, but of course, having the presidential election in France coming closer, all the discussion about the future of the Eurozone and about the future of the European Union will get hotter, if you like. And also in terms of monetary policies, the Federal Reserve will meet in March and talk about interest rates. About 1/3 of market participants at the moment think that we're going to see another 1/4 percentage point up in interest rates in the US. That's what futures indicate at the moment. So I can promise you, Bosun, the talk about interest rates and monetary policies and its impact on the markets will really get hot during the next few trading days and weeks.
Conrad, take some time off. We all need it. Just take some time off. Let's get back really soon. I'll see you in March. See you in March. Bye for now. Conrad Wilson, my colleague at the Frankfurt Stock Exchange there for Channels Television, reporting for DW Television.